Hello, everyone. Let's start our today's discussion. This is our second day of ATX Practice to Pass webinar sessions. I'm your tutor, Owais Mirchawala, and we conducted first day yesterday. Those who have missed the yesterday's session, the recording will be uploaded on the ACCA's YouTube channel in a day or two. It will also be available on my YouTube channel named as Owais Mirchawala, and for my existing students, it will be available on our learning management system also. Those who want WhatsApp group link, it will be shared on the questions tab in a while. Okay, let's start our today's discussion. I hope you all remember that we decided the basic purpose of these sessions in the yesterday's class at the very start. We discussed that by the time you will be listening my session, it would be like 5 to 10 days to exam. So it is very important to practice some complete past papers at this point of time. I hope that you people must have covered your topics and you must have done the topical past paper practice till this time. Okay. Now, the main reason of failure in advanced taxation exams is lack of attempt-wise paper practice. The basic reason is that the normal past papers available on ACCA website are not updated. The updated ones are available on practice platform and many students do not visit the practice platform. They just do the exam kit, which is topical, and as a result, they are not able to deal with complete attempt-wise papers. When you look at the complete attempt-wise paper, you have to deal with all the topics together. And this is very important in ATX because there are many small topics in ATX course. So when you deal with all the topics together, this is the point where you face difficulty because the topics get mixed, CGT, IST, everything gets mixed. So it is very important that you people at least do few past papers, complete past papers, not the topical ones, complete past papers before going to the exam. I gave you people a commitment that during these sessions we will try and complete at least 2 complete papers, and 1 paper I'll give you people complimentary. Now these 3 papers will be discussed with me on the videos, these video lectures, and I'll be discussing their complete answers with you, and we'll be developing their answers. And then you people promised me that you people will attempt the mock exam and you will send me for marking. Okay, in the yesterday's session, I have guided you people that where you can find this practice platform and where you can find the mock exam. Okay, the recording of the yesterday's class will be available in a day or two, as I stated at the start of the class. Okay, so those who have missed it, no need to worry. Study from the today's class. The first meeting will be uploaded in a day or two. Okay, so let's start our discussion. Yesterday we did question number 1 of September-December 2021 attempt. That was JAG Limited Group. Okay, I told you people that it is very easy for me to just open the examiner answer and discuss the examiner answer with you people. It will save my lot of time. But I'm not doing that approach because in that approach, you will never understand how to develop the answer. So what we are doing is that we read the question and we develop the answer collectively. You people give me the feedback on the questions tab. Those who will attend through recording can communicate through me on my WhatsApp number. I shared my number in the yesterday's class. Okay, now, so we did question number 1 and we were on question number 2, Lucille. In Lucille's question, we did question part A, and today we will be moving towards its part B. I want you all to concentrate on it, and if there are any queries, you can type on the questions tab and I'll respond it. So we did this part A, which was Lucille's financial position for the tax year 2021-22. Now, this part included a discussion on a very interesting issue. that Lucille was confused that despite that she's earning a good amount in UK, but then also she's not able to meet her personal expenditures. So we told Lucille, I hope you people remember, that you are not able to meet your expenses because a big portion of your income includes non-cash benefits. On those non-cash benefits, you have to pay the tax, but through non-cash benefits, you cannot pay your expenses. So we had a discussion on the Lucille's post-tax income calculation. We looked at Lucille's personal expenditures, we looked at the difference amount, we made a summary, and we completed the first 9 marks. Now, today we will be moving towards these 6 marks. I want you all to concentrate and listen to me very carefully. We will try and revise the relevant part of the question so that those who missed the yesterday's session can also connect with us. Okay? So, overseas income and gains on investment property. So, this is a part for how many marks? It is for 6 marks. Okay, let's go and read the email from the manager, which will give detail that what he expects from us in this part. Okay, now explain whether or not Lucille's gain on sale of on sale on 1st February 2021 of her investment property in Tevara will be subject to UK CGT. And number two, Lucille's rental income in respect of her home in Tevara will be subject to income tax in the tax year 21-22. Okay, so there is something about the investment property and some some rental income she will be earning in Tevara. So let's revise some of the part of the question so that we can answer it in a more better manner. Now, I was born in UK and lived there until I was 35 years old. On 1st May 2000, I moved to the country of Tevera, where I lived until I moved back to UK on 1st March 2021. So, had a period of stay abroad. Now, one student made a mistake yesterday that she just looked on May and March. It is very important to look at the year also. Her period of stay is almost 21 years. I am renting out my home in Tevera and will retain the rental income after expenses of £800 per month in that country to use when I visit in the future. So she will be earning some rental income, but she will not bring it to UK. She will keep it there so that she can use the amount when she goes back there in the future. Income from employment. Now, this was the thing which we solved in the previous class. On 6 April 21, I began working full-time in UK for BKB Limited. For the tax year 21-22, my employment package will comprise the following. Now, this part was done in the yesterday's class. Okay, so I hope you people remember this. Okay, just a second. Now, just 1 second, let me adjust my screen a bit. Okay, just 1 second. Now there is sale of investment property situated in Tevera. On 1st February 2021, I sold an investment property situated in Tevera. This sale resulted in a considerable profit as I had owned the property for many years. Having purchased it on 1st February 2005. The proceeds of sale are currently deposited in the bank account in Tevera, although I would like to bring this money into UK in the near future. Now, I have a question from you people. Will this disposal subject to UK tax? I have a question from you people. Now, what's the name of the person? Lucille. Lucille will sell the property on 1st February 21. Lucille will sell the property on 1st February 21. She purchased in 2005. Will this be subject to UK tax? Anyone, please tell me. One student has said no. Anyone? Will it be subject to UK tax or not? Please. Okay, I haven't received much answers. Now, one student has responded that this depends on her domicile status. Now, this is really disappointing answer. See, the capital gains tax do not depends on domicile status. The capital gains tax depends on the residency status. Okay, now look at this. She moved out of the UK in 2000. Okay, she will come back in 2021, March 21. See, I did not ask about arising or remittance basis. I asked a very simple question that whether it will be subject to UK tax or not. Okay, stick to the question. See, she moved out of the UK in May 2000. She will come back in March 21. Now look at the dates. She will sell the property in February 21. She purchased it in 2005. The point is that this property was sold while she was non-resident. This property was sold while she was non-resident. I think you have to look at it here. I highlighted, look at the cursor of my mouse. On 1st February 21, I sold the investment property. Okay, and when she will come back to UK, she'll come back to UK in March 21. So this means that she sold the property while she was non-UK resident. So when you sell a property while you are non-UK resident, you don't pay any tax on overseas assets. This is a property situated in Tevera. Now, one more question. Is she temporarily absent? Will she be regarded temporarily absent? Because if you are temporarily absent, then you have to pay tax when you come back. Again, wrong answer. One student said yes. Now see, one very important thing I want to tell you people. We are not playing rapid fire round. Exam is not a rapid fire round. You pay a very heavy fees for the exam. So before answering, think first. Okay. Her period of absence is from 2000 to 2021. This absence period is more than 5 years. So it's not a temporary absence period. Okay, it's more than 5 years, so it's not a temporary absence period. So it was a very simple answer. It was a very simple answer. See, what did she, the question asked, explain this one. Lucille's gain arising on the sale of on sale on 1st February 2021 of her investment property in Tevera will be subject to UK CGT. Okay, no, she has been resident for 7 years because she have lived in UK for 35 years. She's not temporarily absent because of 5 years. She spent more than 5 years abroad. Okay, she has completed the 4 years initially because she lived in UK till the age of 35 years. Okay, so please listen and then answer. Sir, what if she purchased this before leaving UK but sold when she was not resident? Now, she would be subject to UK tax in your situation if her situation would be of temporary absence. But here the situation is not of temporary absence. The situation is a normal absence because she has spent more than 5 years abroad. Okay, so Lucille's gain arising on the sale. Just a second. Let me adjust my screen a bit because I have to look at the tools of GoToWebinar also. Just 1 second. Now, Lucille's gain arising on the sale of investment property in Tevera will not Russell's gain arising on sale on 1st February 2021 of her investment property in Tavera will not be subject to UK CGT because she was non-UK resident while she disposed this property. Okay, no UK CGT applies on non-UK residents on overseas disposals. Further, as her period of stay was of more than 5 years, therefore, therefore, rules of temporary absence will not apply on her. Now, tell me, was this one difficult? Was this thing difficult? I believe this was very easy. Now, why you people do the mistake? Now, I repeat the things again. Some students may get annoyed that why, sir, repeat same thing again. See, you people get in problem because your memory of rules is not very good. Now, why is it not very good? You people study the topic and you do the topical past paper. When you do the topical past paper, it goes very good because the topic is fresh in your mind. You study the topic, you do the topical past paper. The topic is fresh in mind, it goes very good. But when you do the complete paper in the exam, all the topics get mixed. At that time, your memory is tested. If you remember the rule, it was very easy. So how to improve your memory, how to evaluate your mistakes, do some complete papers. This is the key to success. Okay? So it is not easy to remember all the rules. Okay? Brother, you are not the first one who is giving this exam. You're not the first person. Just do practice. Believe me, it will get hands-on. Even a small child who goes into the class 1 feels difficult to remember the table of 2 or table of 3. But with practice, the things get easier. Okay? So one of the challenge at time is developing the answer even if you know the rules. That this is the reason why I develop the answer with you people so that you people can understand that how you have to develop the answer. This is the reason why I don't just read the examiner answer. So I develop the answer with you people so that you can identify that how we have to deal with it. Okay. Now, one student is asking that, sir, she was not resident while she departed from the UK for 4 years. My friend, she was resident. If you look here, I was born in UK and lived there until I was 35 years of old. So she has lived for more than 4 years in UK. Temporary absence is not applying because her absence period is of more than 5 years. Okay. So do we consider the rule of 15 years out of 20 years? My friend, that rule is of domicile status. That rule is not for temporary residence. Temporary residence has two conditions. You have to be resident for 4 years and your absence period should be less than 5 years. So she was resident for more than 4 years, but since her absence period was more than 5 years, that's why the temporary absence did not apply. Okay, if you people need any revision of the rules, the summary notes are attached in the handouts tab. You can refer the summary notes and that can be helpful for you. Okay, if a person has been resident for 4 or more years than last 7 years and then he leaves UK for less than 5 years, then he will be regarded as temporary absent. Now, 4 years in whole life means that before leaving UK, you should be resident for at least 4 years. You should be resident for at least 4 years in last 7 years. Then you leave the UK and you come back in less than 5 years, then you are temporary absent. But she came back after 5 years. So she is not temporary absent. Clear? Now, coming back. Now, what else he's asking? See, we responded to what he asked. Lucille's gain arising on sale on 1st February 21 of her investment property in Tavera will be subject to UK CGT. So we said that no, this will not be subject to UK CGT because she was non-resident and she is not temporarily absent. Now the second thing, Lucille's rental income in respect of her home in Tavera will be subject to the tax in the year 21-22, whether or not this will be subject to UK tax. Again, I have a question from you people. You can read that some detail is given. Lucille was UK resident when she moved to Tavera on 1st May 2000. She was then UK resident until 5 April 21. She will be UK resident for the tax year 21-22. Now I have a question from you people. Please respond. Read this. Explain whether or not. Please read. Explain whether or not Lucille's rental income in respect of her home in Tavera will be subject to UK income tax in the tax year 21-22. Explain whether or not the rental income of her home in Tavera will be subject to UK income tax in the tax year 21-22. Do remember that she will be resident in that year. Please respond that whether it will be subject to UK tax or not. Yes or no? Everyone. Yes, 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 yes. Yes, because once you become UK resident, you have to pay tax on worldwide income. Once you become UK resident, you have to pay tax on worldwide income. So what I'll do is I'll just copy paste the statement of the question. Lucille's rental income in respect of her home in Tavera will be subject to UK income tax in the tax year 21-22 because she will be UK resident in the tax year 2021-22. It is stated in the question that she will be UK resident. Okay, now there was one more issue in the question. It was stated, I am renting out my home in Tavera and will retain the rental income after expenses of £800 per month in that country to use when I visit there in future. Now the problem is that she will not remit the amount to UK. Now the problem is that she will not remit the amount to UK. So what will be the implication for this? Now here I want you all to be alert. Now this was but point to listen. Now listen. Lucille's rental income in respect of her home in Tavera will be subject Lucille's rental income in respect of her home in Tavera will be subject to UK income tax in the tax year 21-22 on a rising basis. See what I'm writing. On a rising basis. Why? Because she is a UK resident and UK deemed domicile holder. Now, this is the point which many students must have missed out. She is UK deemed domicile holder. Now, you can read, here it's written, despite having returned to UK, she's not going to acquire a domicile of choice. Now, this is one of the points which many students will miss. So I want you all to concentrate. Lucille has a UK domicile of origin, which means she was born in UK. She acquired a domicile of choice in the country of Tavera in the tax year 2001-2. Despite having returned to UK, she's not going to acquire a domicile of choice. Now see how I develop the answer. Lucille do not have domicile of choice in UK, but she will be regarded as deemed UK domicile holder because, why? Listen to me, because she had domicile of origin of UK, okay, she was born in UK and she will be UK resident in the tax year 2021-22. Now, I know that some students might have got confused here. Yes, now I told you at the very start now that what I'm writing now is bit important to remember the rule because some students might not be very good at this rule. I'll go back to my summary notes in the individual overseas issue. Now, today we are talking about overseas income and CGT. We are not talking about overseas IHT. We are not talking about overseas IHT. We are talking about income tax and CGT. Please remember, yesterday I referred you the deemed domicile status for IHT, but now I'm talking about income tax and CGT. Okay, now because we are talking about the UK rental income, I'll go down the deemed domicile status. Here it's a person has been formerly resident, individuals who are born in UK, holds domicile of birth or origin, have been UK resident in the current tax year. So these people are deemed domicile of UK. These people are deemed domicile to be UK. Now, deemed domicile status includes two situations: long-term residents and formerly residents. Long-term residents and formerly residents. Since she had domicile of origin of UK, she was born in UK and she is resident in the current tax year. So we will call her as deemed domicile of UK. Listen to me. Considering that Lucille is UK resident and deemed domicile holder, she will not be able to opt remittance basis. Okay, she will not be able to opt remittance basis. What about automatic remittance basis? I'm renting out my home in Tavera and will retain rental income after expenses of 800 per month in that country. Now listen, her unremitted amount in Tavera will be how much? 800 pounds is per month. I will repeat the things again. So if any query, please wait. Into 12 months, so it will be 800 into 12, it will be 9,600 pounds, will be 9,600 pounds. As unremitted amount is more than 2,000 pounds, therefore, automatic remittance basis will not be available to her. Considering non-availability of remittance basis, Tavera will be subject to UK tax on arising basis on her overseas rental income. UK tax will be payable even she do not remit the amount to UK. Now, I would say that this was the part in part B where students may have done an error. See, you are giving advanced taxation exam. What you need to understand is that you are giving advanced taxation exam. There will be some difficulty in the exam. If you expect that you will be perfect in the exam and you will be able to pick up everything, that is not possible. So you have to, I would say that you have to keep some a big heart, and you have to be a bit tolerant. Like if you forget something, that's not a big issue, but still, if you will do good practice, this risk will be minimized. If you will do good practice, this risk will be minimized by some extent. Okay, if you would have done good practice, you would have identified this point. Let's read this again so that if someone has not got the point, he or she can look at it again. The first thing which he asked in the part B, um, now one student has asked a very funny question, sir, what if we make a mistake of using rates of old Finance Act? Obviously, everywhere where you will use the wrong rates, you will be penalized. Okay. This is the mistake which examiner do not expect. If you have not prepared for the current finance act, just read the technical articles available on the ACCA website for basic tax and advanced tax. It's very easy. You can message me on my WhatsApp. I'll send you the link and you can read that. Now the first thing which he asked, that what about the taxation of the gain? So we responded that the gain on sale of the investment property will not be subject to UK tax because Lucille was not UK resident at that time. Secondly, rules of temporary absence are not applicable on Lucille because her period of absence was of more than 5 years. Now, this was a simple answer. This was a simple answer. Now, secondly, what about the Lucille's rental income in respect of her home in Tavera? So we responded that since Lucille is UK resident in the relevant tax year, therefore she have to pay tax on Tavera's rental income. Okay, she have to pay tax on Tavera's rental income. Okay, since she is resident. Then there was an issue that she was not remitting the amount. Okay. Just a minute on my number after session. Now, the second issue was that she was not remitting the amount to UK. So we said that we have to look at whether a rising basis will apply or whether remittance basis will apply. So we talked that she is resident. There is no doubt on that. As far as her domicile status is concerned, she is deemed domicile holder. She is deemed domicile holder because she was born in UK. She has domicile of birth, domicile of origin. Now, this was the point which many students may have missed, but I would say that good practice may have enabled you to detect it. Okay. Automatic remittance was not available as her unremitted amount was more than 2,000. And lastly, since she's being taxed on a rising basis, so the amount will be subject to UK tax, irrespective of the remittance to UK or not. Is it clear, everyone? Is it good? Is it clear? Okay. So I'm getting confused then when we need to apply temporary residence versus the temporary absence. Temporary absence and is the same thing. There is one rule which is called temporary absence. There is nothing like temporary residence. Temporary absence. Temporary absence rule applies when your absence period is of less than 5 years. Okay, so temporary absence rule is not applicable on Lucille. Why it is not applicable on Lucille? Because her period of absence was more than 5 years. Okay, she is not temporarily absent. Clear? Now, let's move forward. Let's look at the last requirement of this question, which is of 10 marks, trust to be created for the benefit of Lucille's nieces. Okay, let's look at it. I want you all to concentrate on it. Now, this will be the last requirement, and with this, our 2 questions will be completed. Now, let's read it. Creation of trust. I inherited a portfolio of shares following the death of my father in January 2015. I have sold some of my holdings since then and either purchased shares in different companies or used the proceeds to fund my personal expenditure. All companies concerned are UK resident trading companies which are quoted on main London Stock Exchange. Okay. The value of my portfolio is considerable, and I now intend to establish a discretionary trust for the benefit of my two nieces. I will give quoted shares worth 400,000 to the trustees on 1st December 21. I will pay any inheritance tax when this gift is made. So I think there is nothing difficult in it. Lucille got some shares from her father on his death in January 15. Now Lucille wants to give these shares to a trust which will be operated for the benefit of her nieces. Okay, let's read the email from the manager in relation to the trust that what he is asking. Trust to be created for the benefit of Lucille's nieces. Availability of relief. In respect of the proposed gift of quoted shares to the trust, explain whether or not CGT gift relief will be available. Explain whether or not CGT gift relief will be available. I have a question from you that whether gift to trust will qualify for CGT gift relief or not. Yes or no? Whether gift relief will be available or not. Yes or no? So the answer is a big yes. Why it's a big yes? Because gift to trust is a transaction immediately chargeable to IHT. And whenever a transaction is immediately chargeable to IHT, whenever the transaction is immediately chargeable to IHT, CGT gift relief will always be available. So, CGT gift relief will be available on gift of shares to trust because gift to trust is a transaction immediately chargeable to IHT. Okay, on transactions immediately chargeable to IHT, CGT gift relief is always available. Okay, is immediately chargeable to IHT because it is a CLT. Okay, now one student has asked, sir, I'm confused because shares are not a qualifying asset. These are quoted shares. My friend, for gift relief, there are 5 qualifying transactions. Please listen to me. For gift relief, there are 5 qualifying transactions. Number 1, gift of unincorporated business, gift of unquoted shares, gift of quoted shares in which holding is at least 5%, transaction immediately chargeable to IHT, and agriculture property relief assets. If any one of them is satisfied, you will get gift relief. Since this transaction is immediately chargeable to IHT, so you are not required to look at what other conditions are saying. The transaction should be one of the following. Since the transaction is immediately chargeable to IHT, that's all. The gift relief will be available. It is a gift to trust. On gift to trust, it's a CLT. On CLT, you pay immediate IHT. Sir, please repeat those 5 points. Go to the summary notes. This is the reason why I sent you the summary notes. In CGT, go to the points of gift relief. Okay, here is the gift relief. And here are these 5 transactions on which the gift relief is available. Okay, quoted shares in which donor has 5% holding, unquoted shares, unincorporated business, transaction immediately chargeable to IHT, and transaction qualifying for agriculture property relief. Now, one student has asked, sir, gift to trust is exempt from CGT. Brother, there is no such rule. Why it will be exempt? Tell me why. Is there any reason for it being exempt? No, it's not an exempt transaction. It's a normal gift at market value. It is a chargeable transaction. But since it is immediately chargeable to IHT, you will get gift relief. Sir, what do you mean by immediately chargeable to IHT? Gift to trust is CLT. Gift to trust is CLT. On CLT, you pay immediate IHT lifetime tax. She is not gifting cash, she is gifting shares. She is not gifting cash, she is gifting shares. Gift of shares is a chargeable transaction. Okay, and when you are gifting it to a trust, it is a CLT. On CLT, you pay lifetime tax. On CLT, you pay lifetime tax. Since you are paying the lifetime tax, it is immediately chargeable to IHT. So you will get the gift relief. Okay. Is it clear? No, in case of PAT, it will not be immediately chargeable to IHT. So you have to look at the other conditions. Okay. Gift of shares is a chargeable transaction, whether it's quoted or unquoted. Shares are not an exempt asset. Gift of shares is a chargeable transaction. Now the question is that whether gift relief will be available or not. So you have to look at these 5 points. Since we are gifting it to a trust, so it is chargeable to IHT. There will be lifetime tax on it. So gift relief will be available. Clear? Now, one student asked a question a few questions back. Let me answer him also. Temporary absence rules have nothing to do with the domicile status. Temporary absence rule have 2 points. You were resident for 4 years out of last 7 years, and then you were absent for less than 5 years. In case of Lucille, temporary absence rules are not applying because her absence period was more than 5 years. It was not less than 5 years. Domicile status has nothing to do with temporary absence rules. Okay? Are all the queries responded or anyone has to ask anything else? Okay, now coming back, it's my advice that you people should get these summary notes printed and make 5, 6 sets. Keep it everywhere and just review them regularly so that the rules get very clear in your mind. Okay, coming back to the question, CGT gift relief will be available on gift of shares to trust because gift to trust is a transaction immediately chargeable to IHT because it is a CLT. On CLT, we pay lifetime tax. When we pay lifetime tax, it becomes immediately chargeable to IHT. On transactions immediately chargeable to IHT, CGT gift relief is always available. What else he has asked? Explain the conditions to be satisfied such that business property relief will be available and state the rate at which it would be given. Now I have a question from you people. What are the conditions to be satisfied in respect of the gift of these quoted shares such that the business property relief is available? Can anyone tell me? For business property relief, what are the conditions we have to satisfy? We should have holding of more than 2 years. In quoted shares, we need to have control. Now, this is not gift relief. This is not gift relief, this is business property relief. Now, many students are sending wrong conditions. This is very disappointing for me at this point of time. Please, I told you people at the very start, don't answer me in rapid fire. Go to the inheritance tax. Go to inheritance tax. Open rules of business property relief. Read them and then please answer. Okay? Business property relief. You need to have holding of more than 2 years. You need to have holding of more than 2 years. If it is a quoted shares, the donor must have control in them. Okay, the donor must have control in them. Okay, and there should be no non-business asset. There should be no accepted assets, the investment assets. Okay, so conditions to be satisfied for business property relief, conditions which need to be satisfied for business property relief in relation to gift of shares to in relation to gift of quoted shares by Lucille to trust include. See, these are quoted company shares, so why will you write the point for unquoted shares? Number one, Lucille must have ownership of shares for at least 2 years. Number one, businesses should be doing trading activity if they will own accepted assets, such as investment in shares or land and building, then BPR will not be available on that portion. Okay, Lucille must control those quoted companies, which means at least own 50% plus shares. Okay, if Lucille is disposing shares and acquiring new shares, then holding period of relevant qualifying shares should be at least 2 years in last 5 years. Now this point is written because it was stated in the question that she has disposed some shares. It is written here, I have sold some of my holdings since then and either purchased share in different companies. So this means that she's changing the investments. So in BPR, if you invest in the qualifying assets, you should have at least 2 years ownership in last 5 years. So Lucille must have ownership of shares for at least 2 years. Business should be doing trading activity. The company should be doing trading activity, or I would make it clear, those quoted companies should be doing trading activity. If they will own accepted assets such as investment in shares or land and building, then BPR will not be available on that portion. Lucille must control those companies, which means at least own 50% plus shares. If Lucille is disposing shares and acquiring new shares, then holding period of relevant qualifying shares should be at least 2 years in last 5 years. So what is the difference between first and last point? The first point is when you own the shares of a single company and you complete 2 years. The last point is a situation like you own shares in one company and you dispose them after 6 months. Then for 1 year you did not invest. Then you invested in another company, you hold it for 1 year and then you disposed. Then again you didn't invest for 1 year. Then again you purchased some shares, you kept them for 6 months and then you gifted. Now 2 years are not completed on any single shares. But if I look in last 5 years, 2-year investment is completed in relevant investments. So if we are changing the investments, the tax department says that you should make relevant investment for at least 2 years in last 5 years. Okay. If all the conditions are satisfied, then Lucille will be able to get 50% business property relief. Okay, business property relief. Value of transfer will get reduced by 50% amount. Okay, So what is meant by relevant investment? By relevant investment means the investment which satisfies above conditions. Like for example, we had quoted company shares of one company in which we had control, but we then invested in another company in which we didn't have control. So that second investment will not be the relevant investment. That second investment will not be the relevant investment. Okay. Just taking a confirmation from you people. Is my audio and video coming clear? Because one or two students are complaining. Is it good? Okay. So I think that it's clear from my side. You can check your internet. Maybe there would be some disturbance. Okay. Now, so CGT gift relief will be available on gift of shares to trust because gift of to trust is transaction immediately chargeable to IHT. So he said that yes, gift relief will be available. Then this was a simple theoretical question that what are the conditions for business property relief? Is it okay? Now, what else he's asking? Explain the conditions to be satisfied are written such that business property relief will be available. Now, IHT payable. Lucille's gift to trust will be the only chargeable transfer which she will make during her lifetime. Lucille's gift to trust will be the only chargeable transfer which she will make during her lifetime. The chargeable amount of the gift after available annual exemptions will be 394,000. Calculate the total IST which would be payable in respect of the gift on the assumption that BPR will not be available and that Lucille will die on 30th September 2027. Believe me, it is so simple. Let's start. It is just about starting the question with confidence. Let's do. Now, he has given that assume that there is no BPR, calculate the IST which would be payable if Lucille dies on 30th September. The chargeable amount after annual exemptions will be 394,000. So it is a simple practice question which we do in the class. So let's make a table. Gift to trust on. Now, what is the date of gift to trust? The gift to trust is made in December 2021. I will give quoted shares worth 400,000 to the trustees on 1st December 2021. Give to trust on 1st December 2021. So fiscal year will be 21-22. Okay, let's start. I want you all to be connected with me. And if there is any query, feel free to ask. Oops. Now, the value of transfer after annual exemptions, it is given in the question that value of transfer after annual exemption will be 394,000. Okay. Value of transfer after annual exemption will be 394,000 given in email from manager. Okay. Now we have to calculate lifetime tax on it. Okay. Value of transfer after annual exemption, we also call it as value of chargeable lifetime transfer. Okay. Just a second. Now we have to calculate lifetime tax on it. Okay. So nil rate band of 2021/22. The nil rate band of 2021/22 is 325,000. Last 7 years chargeable transfers. So these are 0. No other lifetime gifts made by Lucille. It is written in the question. So this gives us available nil rate band 325,000. So what will be the lifetime tax? On 325,000, we will apply 0%, so it will be 0. And then 394,000, which was the CLT value, minus 325,000 into 25%. Into 25%. 394,000 minus 325,000 into 25%. So it will be minus 25% because the donor is paying tax. 17250. Donor Lucille is paying tax. Is paying lifetime tax. It was written here. You can read it. I will pay any inheritance tax which arises when this gift is made. Okay, so total lifetime tax will be 17250. So value of transfer after annual exemption or chargeable lifetime transfer is 394,000. Okay, value of transfer after annual exemption is 394,000. Okay, yes, we'll gross it up. Nil rate band of 2021-22 is 325. Last 7 year chargeable transfers are 0. So available NRB is 325. Then we charge the lifetime tax. The total lifetime tax is 17250. So this will give us gross chargeable lifetime transfer. Because whenever lifetime tax is paid by donor, we need to gross it up. 394,000 plus 17250. So the gross chargeable lifetime transfer will be 411,250. Now Lucille will die. Lucille will die on what date? It is written, we have to assume Lucille will die on 30th September 2027. Lucille will die on 30th September. Now we have to calculate the total IHT. Fiscal year will be 27, 28. Okay, so now we'll calculate the death tax. Okay, now chargeable lifetime transfer of 1st December 2021 will get chargeable for death tax as it lies in last 7 years of death. Okay, 30th September 27. If you go back 7 years, it will be 30th September 2020. Okay, now what is the gross chargeable transfer? 411,250. Gross CLT gets subject to death tax. Okay, now you will write death year nil rate band 2027/28. It's 325,000. There is no last 7 year chargeable transfer. Last 7 years chargeable transfers, because this was the only transfer she has made. No other gifts made by Lucille. So this gives us available NRB. Believe me, this was a piece of cake at advanced tax level. Death tax 325,000 into 0%. This gives me 0 on remaining 411,250 minus 325,000 into 40% death tax now. Okay, so 411,250 minus 325,000, it's 86,250. 40%, so it's 34,500. If I'm not wrong, can anyone confirm me? 411,250 minus 325,000 into 0.4, it's 34,500. See, now this is one of the error which students make. What they do is that in last 7-year chargeable transfer, they deduct the same gift which was earlier tax for lifetime tax. Okay, please use your mind. See what you are doing. See what you are doing. Last 7 year chargeable transfer means the transfers which are made before this gift. This do not mean the same gift which was subject to lifetime tax. Okay, you will not deduct the same gift which was subject to lifetime tax. Are there any gifts made before this? So the answer is no. You will not deduct the same gift. Okay. So when you say gross chargeable transfer, is that excluding NRB? No. Gross chargeable transfer means the gross step amount, which includes the lifetime tax also. When the donor pays tax, when the donors pay tax, we use the gross CLT, which includes the lifetime tax also. Okay. So the total is 34,500. Now we will deduct two things: taper relief. Now what will be the taper relief? Taper relief will be how much? Now let's count. December 21 to September 27. December 22, December 23, December 24, 25, 26. Okay, from December 21 counted. December 21 to 22, 23, 24, 25, 26. Now the Lucille will die in which year? She will die in 30th September 2027. So how many fiscal years? How many absolute years? So taper relief will be 60% as gap between gift and death is 5 to 6 years. How 5 to 6 years? December 2021 to September 2027. Just count it. December 22, 23, 24, 25, 26. December 27, she died before that. So it's 5 to 6 years. So what will be the 60% taper relief? 34,500 into 60%. Can anyone tell me? So it will be 20,700. Then you will deduct tax already paid during the life. What is tax already paid? The tax already paid was 17250. So tax already paid is 17250. So the death tax, I think, will reduce to 0. Okay, the refund is not given. No refund is given. Okay, since death tax is reduced to 0, therefore total IHT payable in respect of this gift will be lifetime tax of 17250. I will repeat it because some students may have got confused. You should not be confused at this level on this basic calculation, but still we will repeat it so that if someone has any query, it gets cleared. Let me make it more presentable first. Okay, now. So we deduct taper relief first or we deduct tax already paid first. You can do any one, but just apply the taper relief on the death tax value. Okay, you can do any one first. It's not an issue. Okay, so let's repeat it again. Believe me, it was such an easy requirement. Now, he told us that assume that there is no BPR. Assume that there is no BPR. Assume that there is no BPR. Calculate the maximum IHT which can arise. So we said, okay, it is gift to trust in December 21, fiscal year will be 21-22. So the value of transfer is 394,000. It was given in the question. Okay, so nil rate band is 325. Last 7 year chargeable transfers were zero. It was written in the question that there are no other transfers. So the available nil rate band was 325. Then we move towards the lifetime taxes. On 325,000, it was zero. And we deducted 394 minus 325, and we applied lifetime tax of 25%. Since donor, the Lucille, was paying tax, the total lifetime tax was 17250. Since the donor is paying tax, so we grossed up the CLT value, 394 plus 17250, so it's 411250. Okay, that was very simple. It was simple piece of working. Lucille will die on 30th September 27, so there will be death tax also. So uh, this gift will get chargeable to death tax because it lies in last 7 years of death. Your death is in September 27. This gift was made in 21. Gross CLT subject to death tax. Then there was again nil rate ban. There were no other gifts. So the nil rate ban was available. We applied 0%. On rest, we applied 40%. Taper relief was 5 to 6 years. We counted from December 21 to September 27. December 22, 23, 24, 25, and 26. So December 26, it's 5 complete years. Before December 27, she died. So it's 5 to 6 years. The taper relief is 60%. There was tax already paid also. No refund is given. And since death tax is reduced to zero, therefore total IST payable will be the lifetime tax. Okay, let's look at few questions which the students have sent, and let's revise this entire question. Sir, do we need to add the comments like you add in the third column? Yes, you have to add it. Okay, you are going for advanced taxation exam. This examiner expects that the student will give slight footnotes. These are called the footnotes for the calculations he is doing. Sir, will there be any marks for the presentation? See, in question number 1, there are marks for presentation. In question 2, there are no marks for presentation. But at least the examiner expects that your answer is in such a format that it is understandable for him. It's not confusing. Okay, so there should be reasonable presentation. So what about the annual exemption of IST? See, the inheritance tax do not depend on residency status. The inheritance tax works on the domicile status. When the examiner said that you have to calculate the IST, the annual exemptions will also be available. Since the question itself stated that value of transfer is after exemptions, you can read here, it was written, the chargeable amount of the gift after exemption will be 394. Okay. Now, one student asked that, sir, if that lifetime tax would have been payable by donee, would we gross up then? No, if the lifetime tax would have been paid by donee, then we would not be grossing up. Okay, so let me export this question first. December 21, answer 2. Complete. Okay, I will share all the documents with you people at the end of the 3-day webinar session on the WhatsApp group. Okay, the recordings will also get available in a day or two. They will be available on the ACCA Pakistan official YouTube channel and also on my channel of Owais Mirchawala. Okay, but it will take a bit time. So can we save the answer from the software? Yes, you can click here on the print button and then you can save it as a PDF. And the software automatically saves also. Like when you will resume, it will get resumed from the same place. So if we look at this entire question, it was a 25 marks question. Believe me, this was very easy. First part was Lucille's financial position, where Lucille was confused that why she is getting a deficit despite of earning so much. So we commented, we calculated her tax, and we proved that she had a deficit of £4,000. And we commented in summary that she has some non-cash benefits also, which are getting subject to tax. Okay, we did this in the previous session. Then today we started with overseas income and gain. The first part was on non-residency. and temporary absence issue, then the rental income issue, deemed domicile working. Okay, so that was also very simple. And then the gift to trust. So we commented on the gift relief point. Then there was comment on the business property relief, BPR, and then there was some basic IHT calculations. I hope that this is clear. Is there any query? Okay, so now we will be moving towards question number 3. Now we will be moving towards question number 3 of this paper, which is section B. Okay, now before starting question number 3, I'll take a small break because I have to do Maghrib prayers. As I told that I'm currently in a different country, so due to time zone, my Maghrib time has already started some time back, so I have to do Maghrib prayers and we'll resume in 15 minutes. Okay, so we are going for a namaz break for 15 minutes and then we will resume and we'll do the question number 3. Okay, so let's go for a namaz break for 15 minutes and then we will resume. Yes, you people are always in my prayers. Okay, and this webinar has been um, uh, a traveling webinar. On the first day I was in Makkah, today I'm in Jeddah, and the third day of webinar will be in Karachi. So hope so that this will be very beneficial for you people. Okay, so we'll resume in 15 minutes and then we'll start from question number 3. Okay. Okay, so let's resume. So now we are starting with question number 3. I want you all to concentrate and let's look at it. Okay, this will also include some good issues and it will give you a good insight of some matters. Okay, so we are doing series of past paper sessions. Uh, we did question number 1 of December 21 attempt. We did question number 2, and now we are moving towards question number 3. Okay, let's start. I want you all to concentrate on it. You should assume that today's date is 1st September 2021. Sabine requires advice on the tax implications of his loss-making unincorporated business and selling his business asset. Patan Limited is seeking advice in respect of the corporation tax relief available for capital expenditure and for expenditure relating to research and development activities. The following exhibits available on the left-hand side of the screen provides information relevant to the question. Sabine and Patan Limited. The information should be used to answer the question requirements within your chosen response option. So you all know that this detail is not too much useful. Let's start reading the relevant information. I want you all to concentrate on it so that you people can get clarity on it. Okay, we start. This is a good question involving some issues of losses. Sabine ceased trading on 31st December. Sabine ceased trading on 31st December 2020. Sold his business premises and a specialist machine to Patan Limited, an unconnected company, on 1st April 2021. Has income from his business and from part-time employment 6,000 gross. Okay, now, so let's look at what else he's asking. Just a second. Now, so sold his business premises and specialist machine to Patan Limited, an unconnected company, on 1st April 21. Has income from his business and part-time employment 6,000 gross per year. Uses his annual exemption for CGT purpose every year. Now, Sabine commenced in business as a sole trader on 1st July 2012. Sabine overlap profits from commencement of the business are £7,800. Tax adjusted profits and losses of the business were as follows. Year ended 30th June 17, 44,000. 2018, it's 32,000. 2019, it's 21,000. In 2020, there is a loss of 4,000. And then in 6 months ended 31st December 20, it's a loss of 23,000. Now, this was the last period of trading. Okay. Now, Sabine's sale of business premises and specialist machinery to Patan Limited on 1st April 21. Date of acquisition. Business premises were acquired in July 2012. Its cost was 86,000 and the sale proceed will be 114,000. Specialist machine was acquired on 1st May 17. Its cost was 49,000 and it will be sold for 41,000. The business premises had been wholly occupied by Sabine's business throughout his period of ownership. Sabine had claimed capital allowances on the specialist machine. So, as you all know, this is the first reading of the question, and the basic objective of doing this reading is to identify the data. There must be some things which are not very clear at this stage, but there is nothing to worry. As I always say, that when we do first reading, our aim is to identify the data, and we will look at everything in detail once we read the requirements and we come back. Then we have information relating to Patan Limited. Patan Limited was incorporated and commenced trading on 1st April 21. Expects to make tax-adjusted trading loss for the year ended 31st March 22. Has no other source of incomes or gains in the accounting period. Is a small or medium enterprise in the purpose of R&D expenditure, research and development. Then we have some Patan Limited capital acquisitions and disposal, and we have some detail about research and development. What we'll be doing is that let's solve the Sabine's part first, and then we will read the Patan Limited detail. Because the question is divided in two portions. One is the detail for Sabine, and the second is the detail for Patan Limited. So what we are doing is that first let's deal with the issues of Sabine, because I hope that requirements, normally in section B, the requirements are divided. You should assume that today's date is 1st September 21. Calculate with supporting calculations the income tax saving for Sabine if he claims terminal loss relief only for the trading losses arising in his final two trading periods. How many marks are available? 8 marks are available. Calculate with supporting explanations the income tax saving for Sabine if he claims terminal loss relief only for the trading loss arising in his final 2 years of trading. Now, Sabine has ceased trading on 31st December 20. In the 6 months ending 31st December 20, she made a loss of 23,000. In the year before, she made a loss of 4,000. Now, the question specifically says that just talk on terminal loss relief. Don't think anything else. How many marks are available? 8 marks. We have to calculate the income tax saving. Let's look at it. This would be an interesting question because normally the students get confused when they are dealing with losses. Okay, so let's look at it so that if anyone has any query, it gets cleared. Sabine and Patan Limited, and we are starting with the part A. Since in question number 3 there are no professional marks, so we will directly start with the requirement. Calculate with supporting explanation the income tax saving for Sabine if he claims terminal loss relief only for the trading loss arising in his final 2 trading periods. I want you all to concentrate on it. Now, Sabine has ceased trading on 31st December 2020. The last period of trading is of 6 months. Please listen to me. The last period of trading is of 6 months. Now, you all know that if the last period of trading is of 6 months, we have to compose the terminal loss. If last period of trading is of 6 months, we have to compose the terminal loss. If it is of less than 12 months, we have to do composition. Okay, now, Sabine ceased to trade on 31st December 2020. Is it so? On 31st December 2020. Her last period of trading is of 6 months. Okay? As it is of less than 12 months, therefore, terminal loss needs to be composed. Okay, terminal loss is loss of last 12 months of business. Okay. Now, in individuals, the things are not very much simple because we have to look at the fiscal year also. Now, listen to me while I calculate it. I would say that it is a bit difficult one. Now, what do I mean by bit difficult? Because normally the students get confused when they are dealing with the individual loss composition. Okay, terminal loss composition. So first of all, what we will do is we will pick loss in last fiscal year. Now see, it's not the loss in last accounting year, it is loss in last fiscal year. It is loss in last fiscal year. Now, if you look at the question, Sabine ceased to trade on 31st December 2020. So the last fiscal year, loss in last fiscal year, it will be from 1st April 2020 to 31st December 2020. Basically, 1st April 2020 is start of fiscal year and 31st December 2020 is cessation of business. Okay, listen to me with patience, the things will get clear. We are picking up the loss of last fiscal year. Okay, we are picking up loss of last fiscal year. 1st April 2020, the start of fiscal year, to 31st December 2020, the cessation of the business. Okay, now let's look at the loss of last fiscal year. Now, in the last fiscal year, 6 months period to 31st December 2020. So this 6 months period is given separate. This 6 months period is given separate in the question. You can look at it here. Listen to me with patience, things will get clear. 6 months ended 31st December 2020. This is given separate. It shows a loss of 23,000. Okay, this period is separate. 23,000 loss. 23,000 loss. See, what we are doing is we are doing terminal loss composition. Please listen to me. We are doing terminal loss composition. Now, while doing terminal loss composition of individuals, we look at loss in last fiscal year. Loss in last fiscal year. Sorry, it's July 20. We look in loss in last fiscal year. Now, the last fiscal year starts in April 20 and it will end in December 20 when the business is ceased. 6 months period to 31st December 20 will be July to December. Okay, not from June, July to December. 6 months are July to December. Now what we have to do is 3 months from previous accounting year. Not previous fiscal year, 3 months from previous accounting year. 1st April 2020 to 31st April 2020 to 30th June 2020. So please repeat it again. See, Sabine has ceased to trade on 31st December 20. Listen to me. Sabine has ceased to trade on 31st December 20. Her last period of trading is of 6 months. You can see it in the question. Her last period of trading is of 6 months. When your last period of trading is of 6 months, it is less than 12 months. You have to compose the terminal loss. In companies, the composition of terminal loss is very simple because in companies, we look at the accounting year. In individuals, we don't look at the accounting year, we look at the fiscal year working. So what we have to do is loss in the last fiscal year, not the loss in the last accounting year, it is loss in the last fiscal year. Now the last fiscal year will start from April and it will end on cessation of December 20. Okay, so you can say that these are 9 months. Now 6 months period to 31st December 2020 These 6 months were given separate in the question. 23,000 loss. 3 months from previous accounting year. 3 months from previous accounting year. Now you can see that in the previous accounting year, there was a loss of 4,000. Okay, it was a complete year. 4,000 divided by 12 into 3. So this gives me a loss of 1,000. Okay, so please repeat it again. We are doing terminal loss composition. First of all, we will look at the loss in the last fiscal year. April 20 to 31st December 20. April 20 to 31st December 2020. Start of fiscal year to cessation. Okay. Now, in this loss of last fiscal year, 6 months are straightforward and 3 months are borrowed from the previous accounting year. Now, what we have to do is borrow from previous fiscal year. Now, one student has asked, sir, what is the difference between terminal loss composition for individuals and companies? In companies, it is very much simple. We simply write loss in last accounting year and borrow from the previous accounting year. In individuals, we don't look at the accounting year, we work out the fiscal year. Okay, we work out the fiscal year. Now we have to borrow from the previous fiscal year. How many months we have to borrow? We have to borrow 3 months from previous fiscal year to make our complete bracket of 12 months. Okay. So 1st January 2020 to 31st March 2020, 3 months. So we are borrowing 3 months from the previous fiscal year. Okay. It's better to use word fiscal year. Okay. Now, we will borrow 3 months. Now, these 3 months are obviously from this period, year ended 30th June 2020, because this year starts from 1st July to 30th June. Okay, so we are borrowing from it 1st January 20 to 31st March 20. Okay, this is second last accounting period. 1st January 2020 to 31st March 2020, 3 months. So it's 4,000 divided by 12 into 3, so it's 1,000. So our loss for 12 months will be 23 plus 1 plus 1. This is 25,000. We will add our old overlapping profit in it to complete the working. Okay. Now, one student has asked, so if we would have done it like companies, still the things would remain same. Yes, in this particular question, it would remain same because the last period was lying in the last fiscal year only. When it is lying in the previous fiscal year, then the things get different. So if you will use it through accounting year, the examiner will deduct your marks because the examiner wants to see the fiscal year working and he wants to see the relevant concept application. Okay, I will repeat it again. I want you all that rather than going for a shortcut, it would be much better if you try and understand the approach. Okay, now many students, now this is very much normal that what many students do is that they say, okay, it's very difficult and we can't do it, and they just leave it. Don't do this. You are in advanced tax level, you shouldn't be doing this. You should try and understand it. Sabine ceased to trade on 31st December 20. Her last period of trading is of 6 months. Now, since it is of less than 12 months, so the terminal loss will be composed. Now, how do you compose the terminal loss? The question is that how do you compose the terminal loss? In individuals, we don't look at the accounting year, we look at the fiscal year. We look at the fiscal year. Loss in last fiscal year. In individuals, we look at the fiscal year. Loss in last fiscal year. April 20 to 31st December 20. It's a 9 months period. Okay. April 20, start of the last fiscal year, and December 20, we ceased. So we need the loss for these 9 months. Now the 6 months period loss was available straightforward, 23,000. 3 months we need to borrow from the previous year. 3 months we need to borrow from the previous year. So 6 months are straightforward. 3 months we borrowed from the previous year. So 23 plus 1. Now 9 months are done. Now we need to borrow 3 months from the previous fiscal year to complete our 12 months slot. So obviously these 3 months are January to March. Now this January to March lies in this second last accounting year, which is till June 20. It includes loss of 4,000. So second last accounting year, January to March, 4,000 divided by 12 into 3. So the loss for last 12 months is 25,000. Now there is some overlapping profit given in the question. You can find it here. Overlapping profit is given here. Overlapping profit from commencement of the business is 7,800 pounds. So overlapping profit is 7,800. This will also be added in our terminal loss. So the terminal loss will be 32,800. Okay. So for previous fiscal year, why didn't we take 3 months from total 12 months? Like April 19, March 20. Didn't get what you are saying by April 19, March 20. We need previous fiscal year, we need 3 months. So those 3 months are from January to March 20. These 3 months lie simply in this period. Year ended June 20. So we borrowed this simply. Okay. If the last period is less than 12 months, if the last period is of less than 12 months, you always have to compose terminal loss. Okay. The overlapping profits were given here. The overlapping profits are the one which were taxed twice, at the start. So you add it in the loss one time. Okay. Now there were some bunch of questions. Maybe I missed someone. Okay. So I have responded this one, overlapping profits. Okay. So we need to mention both fiscal year wise and accounting year wise. Yes, you need to mention it. I mean total profit or loss for accounting period 19 till 31st March 20. No, you just need to borrow 3 months from the previous fiscal year. You just need to borrow 3 months from the previous fiscal year. So now those 3 months are January to March. Now you will find these 3 months that in which accounting year these lie. So this lies in this slot. Okay. Why loss not mentioning by negative sign? You can do this. You can mention it like negative sign. Since it's loss and loss, so it's assumed that it's negative. Okay, so you can put a bracket. It's not a big deal. Okay. Now, so this is the terminal loss which we have composed. If I read the requirement, what he's saying, calculate with supporting calculation the income tax saving for Sabine if he claims terminal loss relief only for the trading loss arising in his final 2 trading periods. So now we have to quantify the tax saving. Now when we have to quantify the tax saving, we have to make a table, which I always make. Now my students must know that what I do is that I make a pro forma so that we can identify the savings. Let's look at it. Okay. Now, one thing before moving towards the pro forma, last period of trading. Okay, one question, sir. How did you get January 20 to 31st March 20 from the second last tax and not second tax, is second last tax here? See, loss in last fiscal year is April to December. These are 9 months. Now I need 3 months more. These are 9 months. I need 3 months more. Obviously, these 3 months do not lie in this fiscal year. I'll borrow it from the previous fiscal year. So January to March, I'll borrow it from the previous fiscal year. Now find that where does this January to March period lie in this table? Obviously, January to March will lie in year ended 30th June 20, because year ended 30th June 20 is from July 19 to June 20. So January to March 20 lies in between this. Okay. If it is a profit, then will the loss be reduced? Now here you need to remember that while we are borrowing, if the net amount is a profit, we don't borrow. While we are borrowing, if net amount is a profit, we don't borrow. Okay. Why the 3 months from second fiscal year, not from April to June? Just, I would say that the terminal loss is loss of last 12 months. So the cessation is December 20. The cessation is December 20. You go back 12 months. So December to April and then March to January. You need last 12 months. You don't go back the starting 3 months. Why you pick the starting 3 months? You have to make your last 12 months. You have to make your last 12 months. Just make a sketch in your mind. You have to make your last 12 months. So it's December to January. It's December to January. So December to April in the last fiscal year and the start January, February, March in the previous fiscal year. So what if there is no loss in the previous period? Then we don't borrow. Then we don't borrow. Okay. We will not borrow. Now, last period of trading is of 6 months ending 31st December 2020. Okay. It lies in fiscal year of 2009. It lies in fiscal year of 2020-21. Listen to me. Last period of trading is of 6 months ending 31st December 20. It lies in fiscal year of 2021. Now, second last accounting year ends on 30th June 2020. It also lies in fiscal year of 2020-21. Okay. This means that last accounting period will be merged with second last accounting period and will be assessed in fiscal year of 2021. Now, here I would need to talk something with you people. Now, many students are not clear in these things. Many students. Now, just try and understand the approach. When there is cessation of business, you have to look at terminal loss. Listen to me very carefully. The question will automatically get clear. This is a very good learning concept. Whenever there is cessation of business, you have to think on terminal loss. Okay. If the last period is of less than 12 months, you compose the terminal loss. If the last period is of less than 12 months, you compose the terminal loss. In individuals, you look at the fiscal year. Now, once you have composed the terminal loss, that is a separate topic. Once you have composed the terminal loss, that is a separate topic. First step, cost composition. Now, second step, think about basis period calculation. Many students, by word many, I mean 90% of the students, are not clear how to use individual losses and how to use basis period together. First, compose the terminal loss. Once the terminal loss is composed, now you need to identify that how the last period will be assessed. Remember basis period calculations. Remember closing year rules. If the last and second last period end in same fiscal year, we merge them. If the last and second last period end in same fiscal year, we merge them. If they end in separate fiscal year, we assess them separately. Now, very important, very important. Many of the students don't think about the basis period impact. What they do is they just compose the terminal loss. They say, okay, it's done. No, you have to make the loss relief working. Okay, so please repeat it one time more. See, composition of terminal loss is a separate thing and basis period assessment is a separate thing. You are talking about individuals, so you need to look at the fiscal year. First, make it clear. You are talking about individuals, so you need to look at fiscal year, make it clear. So if the last accounting period is of less than 12 months, you will compose the terminal loss. This is a separate chapter. This is a separate chapter. This is a separate topic. I'll say it again. If the last accounting period is of less than 12 months, you compose the terminal loss. This is a separate chapter. This is a separate topic. Step 2. Once you have composed the terminal loss, now you have to think. Now you have to think that in which period you will assess. Now you have to think that in which period you will assess your terminal loss. In which period you will assess the terminal loss. You will assess the terminal loss in 1920, 2021. In which period you will assess that? Now you have to think that in which period you will assess that. So while you have to decide that in which period you have to assess, what you will do is that now you have to look at the basis period working. That if the last accounting period ends in same fiscal year, if the last accounting period ends in the same fiscal year, you merge it. If it ends in different fiscal year, you will assess it separately. Okay? So first, we composed the terminal loss. That was a separate thing. Then we said that since the last accounting period ends in the same fiscal year, see, basis period is a different thing. Since the last accounting period ends in the same fiscal year, we'll merge it and we'll assess it in the same fiscal year. Now, listen to me why this was useful. Listen to me. Now, you have some periods given in the question. Listen to me. First period is year ended 30th June 17. Listen to me. Year ended 30th June 2017. Which fiscal year is it? It's 2017-18. Because you identify the fiscal year from end date. Then you are given with year ended 30th June 2018. Which fiscal year is it? Year ended 30th June 2018. Which fiscal year is it? It's 2018/19. Then you are given with year ended 30th June 2019. Which fiscal year is it? Fiscal year is identified from the end date. Okay, June 19. I started using mine. June 19 lies in 1920. Then it's year ended June 20, and then it's 6 months ended 31st December 20. So this entire period will be added and it will be assessed together. Period ended 31st December 2020. These are 18 months. And this is fiscal year of 2020/21. So please repeat again. Yes, I'll repeat it again. You know that. It's my habit to repeat it. Let's look at it again. The first step is to compose the terminal loss. The first step is to compose the terminal loss. First step, you look at the terminal loss. You say, okay, this is the terminal loss. It was a small period. We need to compose. You did all the working. Since it was individual, you look at the fiscal year. You did everything. Very good. Now, once the terminal loss is composed, then you need to look at how you will assess the last period. You need to assess that how you will assess the last period. How you will assess the last period. So the last period of trading is of 6 months ending 31st December 20. It lies in fiscal year of 2021. Second last accounting year ends on 30th June 20. It also lies in fiscal year of 2021. This means that last accounting period will be merged with second last accounting period and will be assessed in fiscal year of 2021. Please confirm me that whether I'm able to make myself clear or not. Please tell me. Okay, identification of fiscal year is a separate thing. Now let's look at the trading profits which he is earning. Now the trading profits which he's earning is 44,000, then it's 32,000, then it's 21,000, and then there are losses. So 44, 32, 21, 44,000, 32,000, 21,000. And then there is a loss. So instead of loss, I'll write 0. Okay, one student has asked again, sir, that I'm not clear on this 18 months consolidation. Please repeat it again. Okay, I'll elaborate it again. Listen to me. See, what you need to understand is that when there is last period of trading, listen to me very carefully. When there is last period of trading, you need to think about terminal loss if there are losses. Now, if the last period of trading is of less than 12 months, if the last period of trading is of less than 12 months, you need to compose the terminal loss. Now, I hope that this is clear. We repeated it 2-3 times. This was the terminal loss composition. Now, once you are done with the terminal loss composition, think about the next step. The question do not says that just compose. The question says that give me the savings. So for saving, obviously, you need to think about the tax return. For savings, you obviously need to think about the tax return. If you'll start using your mind. For saving, you need to think about your tax return. Okay. Now, while you have to put the things in the tax return, you need to talk about basis period calculation, a chapter which you study in your trading income. Now see, closing year rules, if you remember. Last period of trading is of 6 months, 31st December. It lies in fiscal year of 2021. Second last accounting period of June 20, it also lies in 2021. So we merge both of the periods. If the closing year, if the last year ends in the same fiscal year, we merge them. We merge them and we file a single assessment. So 12 months, year end, and this 6 months, we merge them and we file a single assessment. Okay. Now, one student is saying, sir, why didn't you think about the commencement of the business? Why didn't you think about the commencement of the business? My friend, the business commenced in 2012. I'm not given any data about the starting periods. I'm given data about the cessation period. Okay, I'm not given with any data that when the business started, what was the starting date and what were the profits in the first period. He just gave me the overlapping profit in relation to the starting period. I added it in my terminal loss. Okay, I hope that I have made myself very much clear, but still, if you have any query, don't feel shy. You have my WhatsApp number. Feel free to ask me. Okay, there is nothing to worry. Okay, now, so year ended 30th June 17, 17, 18, 18, 19. We put the profits in the relevant fiscal year. Now, in the question, it states that has income from business, see below, and part-time employment of 6,000 gross per year. So he also earns employment income every year, which is 6,000 per year. So I will put employment income 6,000, 6,000, 6,000. And since it is an 18 months period, so for 18 months, it will be 9,000. Note. Okay. Employment income is 6,000 for a year. For 18 months, it will be 6,000 divided by 12 months into 18 months. So it will be 9,000. Okay, just listen, don't rush. Now this gives me total income. So here it's 44 plus 6, it's 54,000. 32 plus 6, 38,000. 21 plus 6, 27,000. And here it's 9,000. Okay, so these are my total incomes. See, the employment income is 6,000. for 1 year. The employment income is 6,000 for 1 year. Now, since the last period of assessment, you are showing it for 18 months. So you are showing 9,000. Okay. Or you can simply say that for the fiscal year, you can show it as 6,000 because in the entire fiscal year, he is earning 6,000. Trading periods you have merged, but for the fiscal year, you are showing 6,000 because in the particular fiscal year, he has earned 6,000. Okay, but that is not a big deal. Okay, now we have to claim terminal loss. Terminal loss of 32,800 will be relieved against trading income of last 36 months. Now what you need to understand is that terminal loss in individuals only offset trading income. The terminal loss in individuals only offset trading income of last 36 months on last in, first out basis, on LIFO basis, on last in, first out basis. Okay? Now, terminal loss of 32,800 will be relieved against trading income of last 36 months on last in, first out basis. Okay? So, the terminal loss relief will only offset the trading income. Please make it clear. Okay, see, here you are making an error. It will only offset the trading income. It will not offset the total income. It will offset the trading income. Okay, it will offset the trading income. So here the trading income is 21,000, not 27,000. It will offset the trading income, not the total income. So 21,000 will be offset here. Okay, loss will be relieved. Loss will be relieved against 2019-20 trading income. Loss will be relieved against 2019-20 trading income of 21,000. Remaining loss of 32,800 minus 21,000. How much is remaining? 11,800 will be relieved in 2018-19. So this 11,800 will be relieved here. Okay, so our revised total income will be, here it's 54,000, 38,000 minus 11,800. So here it's 26,200. Here it's 6,000. Okay, now, so I will repeat it again. Listen to me. We compose the terminal loss. I hope it's clear. We compose the terminal loss. I hope it's clear. We compose the terminal losses for every year. 30th June 17, 18, 19. Okay. And then period ending 31st December 20. Okay. Terminal loss is only for trading income. Terminal loss is not a topic of non-trading income. Okay. Terminal loss is only a topic of trading. Okay, here it's a calculation error. 44 plus 6 is 50. 44 plus 6 is 50. It will not affect any calculation because it has not been changed. Okay, terminal loss is only topic of trading income. Okay. Now, once a student has asked, sir, why didn't you offset it against the current year? My friend, do you see any trading income in the current year? Please don't make an error. What you people will do will be a very silly mistake that you will offset the total income. Please don't do this. In individuals, the terminal loss offset the trading income only. It only offsets the trading income, not the total income. Okay, trading income of last 36 months. So trading profit 21. From 32,000, it offset 11,800. Okay, it is showing below, but it is offsetting the trading income. In 2018 also we should start off against. My loss is completely utilized. My total loss was 32,800. My total loss was 32,800. In 1920 I claimed 21,000 and remaining was relieved in 1819. In company it offsets total income. In companies it offsets total income. Now I have to comment on the tax benefit. Tax benefit will be, now what is the tax benefit amount? In 2019-20, loss claim was of 21,000. Okay, it will give saving at basic rate of tax, because he is a basic rate taxpayer in every year. If we think about the personal allowance also, it will give saving at basic rate of tax of 21,000 multiplied by 20%. So 21,000 multiplied by 20% is 4,200. Okay, but there is one more issue. In 1920, our personal allowance will get wasted by some amount. Why it will get wasted? Because our revised total income is now 6,000. Our total personal allowance is 12,570. Okay, personal allowance will get wasted as revised total income is 6,000, whereas personal allowance is 12,570. Personal allowance will be wasted by 6,570. This will result in tax impact of 6,570 into 20%. So it will be 6,570 into 20%. So it's 1,314. Okay, net benefit will be 4,200 minus 1,314. So the net benefit will be 4,200 minus 1,314. So it's 2,886. Now I know that some of the students might be crying. Okay, see, the loss claim is made before personal allowances, but obviously you will hit your personal allowance here. While calculating the tax benefit, you will hit the personal allowance also here. Okay, so obviously you need to think about the personal allowance also while you are calculating the benefit. In all of these years, you will get the allowance, but here your allowance will be restricted to 6,000. Okay, now let's repeat the things and let's look at the queries. Now there are a bunch of queries gathered in the chat box. See, first of all, I copy pasted the question: trading profit, employment income. We got the total income values. Now we had to claim the terminal loss relief. See, the terminal loss relief will offset the trading income. The terminal loss relief will offset the trading income. Now you can show it after trading profit also. But since I've written this statement that it will offset the trading income, so I calculated the total income originally so that I can look at the figures. I'm claiming it against the trading income, 21 minus 21. 21 minus 21. In the previous year, I don't have 32,000 remaining. My remaining loss is 11,800. So from 32, I'm deducting 11,800. It's offsetting against the trading income. It's offsetting against the trading income. 21 minus 21, complete amount is offset. Here, the remaining loss is offset 11,800. Now, what is the tax benefit? In 1920, the loss claim is 21,000. So 21,000 into 20%, it's 4,200. Okay. Personal allowance will get wasted as total income is 6,000, whereas personal allowance is 12570. So from 12570, 6,000 is used, but 6570 is wasted. The tax impact will be 1314. Now, some students will be thinking that, sir, ATX is so difficult. How will I do? My friend, these are only 8 marks out of total 100 marks. So even if you do something wrong, like if you do half of the question wrong, you only compose the terminal loss correctly. If you compose terminal loss correctly, then also you'll get 3-4 marks. So what you need to understand is that don't get frustrated in the exam. If any particular requirement is difficult, leave it. Do what you can do, but don't waste your time. Obviously, currently we are doing practice, so I'm going through the entire debate, but in the exam, you don't have to waste the time. Okay? Now, in 2018-19, loss claim will be 11,800. It will give tax saving of 11,800 into 20%. So it will be 2360. Okay, no wastage of personal allowance as sufficient income exists after it. Okay, this person, what's the name? Sabine. Sabine is a basic rate taxpayer after consideration of personal allowance. Okay, I will repeat it again. So here it's done. Okay, what he's asking, calculate with supporting explanation the income tax saving for Sabine if he claims terminal loss relief only for the trading losses arising in the final 2 trading periods. Okay, if she claims terminal loss relief only, what will be the tax saving? If she claims terminal loss relief only, what will be the tax saving? So first of all, we composed the terminal loss. First of all, we composed the terminal loss. Okay, Sabine ceased to trade on 31st December 20. Her last period of trading is of 6 months, as it is of less than 12 months. So we need to compose the terminal loss. Composition of terminal loss is a separate issue. Composition of terminal loss is a separate issue. Loss in last fiscal year, April to December. In individuals, we look at the fiscal year. It's my advice, don't go for shortcuts. Remember the approach. Okay, in individuals, we look at the fiscal year, April to December. Now, 6 months were straight given in the question. 3 months were borrowed from the previous accounting year. Okay, then 3 months were borrowed from the previous fiscal year. This is our loss of 12 months. We added overlapping profits, and this was our terminal loss. Now, last period of trading is, now once you have composed the terminal loss, now the second issue. Now what is the second issue? The second issue is basis period calculation. The second period is basis period calculation. Once you have composed the terminal loss, the second issue is basis period calculation. Last period of trading is of 6 months. It ends in 2021. Second last accounting year ends in June 20. It also lies in 2021. So we'll merge them and we'll file a single assessment. Year ended June 17, year ended June 18, year ended June 19, and period ended December 20, 18 months of 2021. These are our trading profits. Now, employment income 6,000, 6,000, 6,000. Here I will make one correction. I made an error. This employment income will be 6,000 here. this note will be removed. Why it will be 6,000? Because for trading income, we are merging two periods. In any particular fiscal year, in 1718, in 1819, in 1920, and in 2021, we are earning employment income of 6,000. Okay, this will not affect your answer because we are not claiming any relief in 2021. So if anyone would have done it wrong, still there would be no deduction. But this shows that you have to be alert. Even if the teacher will lose concentration while solving, there will be some error. I will repeat it again. For trading income purpose, we have merged two periods. For trading income purpose, we have merged two periods. But in a particular fiscal year of 12 months, see, all are the fiscal years 17, 18, 18, 19, 19, 20, 2021. His business has ended. He has not died. In the next fiscal year also, he will earn 6,000. So the employment income will continue on the fiscal year basis. For trading income purpose, we have done basis period. Okay. So it will be 6,000 here. It will be not 9,000. It was an error. So I made a correction. Now, the trading incomes were classified in the relevant periods. The loss was shown as 0. Employment income in all fiscal years was 6,000. We calculated the value of total income. Why do I calculate the value of total income? Because I can make the decisions. Now, terminal loss of 32,800 will be relieved against the trading income of last 36 months. Not the total income, it will be relieved against the trading income. Okay. If you want, you can show this relief after this row. You can add a row here and you can show it up. Or if you show down, this statement is sufficient for explanation. 21,000 is offset here, trading income. The remaining loss of 11,800 is offset in 1890. Okay, one student has asked, sir, why did you change it back to 6,000? See, for the trading income purpose, I have merged two accounting periods. In employment income, there are no accounting periods. The employment income is fiscal years. The employment income is going on normal fiscal year. Every fiscal year is of 12 months in which he is earning 6,000. Trading income period was merged. Okay. Terminal loss relief, yes, you cannot do partial claim. You have to claim entire available amount. Now, what will be the tax benefit? You claim 21,000 here. Since you are a basic rate taxpayer, you can see the income amounts on 21,000. On 21,000, you offset 20%. So this gives you a benefit of 4,200. Now your allowance is wasted because your revised total income is now only 6,000. Your allowance is 12570. 6,000 is utilized. 6,570 is wasted. So the net tax impact on 6,570 will be 20%. So 1,314. So from 4,200, you deducted 1,314. The net benefit is 2,886. Okay. In 2018-19, you claimed 11,800. This gave you saving at 20%. Allowance is not wasted because you have sufficient income. Okay. Now let's respond to some queries. Yes, in companies, the terminal loss will offset the total income. C, the terminal loss offsets the trading income. It do not offset the employment income. Number one. And secondly, you need to understand is that he is ceasing to trade. He is not dying. The employment income will continue in the future. He will earn 6,000 in every fiscal year, which is his job. The business is ceasing. For the business purpose, we merged two trading periods and we showed them in a single fiscal year. Okay. Sir, if there was profit in the second last accounting period, then do we make a single assessment? See, what you need to understand is that if there is a profit in the previous period, that will affect the terminal loss composition. Merging is a second step, which is related to basis period. So yes, Even if there is a profit, you will merge. Even if there is a profit, you will merge and you'll show the number. The loss amount is something separate. The terminal loss composition is something separate, which is step 1. Step 2 is basis period. If it ends in same fiscal year, you merge that. Okay. See, I told you at the very start, this was a difficult requirement. But what you need to understand is that this is not of 100 marks. This is only of 8 marks. This is only of 8 marks. It is not of 100 marks. Don't waste 50 minutes in the exam. Don't waste 50 minutes in the exam. It is of 8 marks, maximum 18 to 19 minutes for this part. So do maximum you can. After that, leave it. Move forward. Okay. While you merge the period, you show the net amount. While you merge the period, you show the net amount. Okay. I hope that it is clear, but still I will say that you people can take time. You will revise it once this class ends. You can take time. You will revise this entire issue. You will revise it. You will sit. You look at it, and you will revise it. Give it some time. If there is any query, then feel free to ask me on my WhatsApp. Okay. Once this class ends, read it, watch the recording again. If it gets 100% clear, very good. If it is not 100% clear, then you can ask me again. Now, one student has asked, sir, what is this 6570 into 20%? This is not a saving. This shows wastage of personal allowance. Our total personal allowance is 12570. Our total personal allowance is 12570. When we claimed the loss of 21,000, we were only left with the income of 6,000. This means that some of our allowance got wasted. Personal allowance wasted 6570. We claimed 6,000, but the remaining allowance got wasted. Since the allowance got wasted, so I'm deducting its tax impact. 6570 into 20%. The tax rate is 20%, so everything multiplies by 20%. He's a basic rate taxpayer. So 4,200 was my benefit. 21,000 into 20%. 4,200 was my saving. 6570 into 20% is my loss of personal allowance. Is it clear? Okay. No stress. If you have any query later on also, feel free to ask. Okay. This is my WhatsApp number. Revise it after class. If you have any query, feel free to ask me. I'll explain on the voice note or on call also. Okay. So if I look at this question, and one student asked me that, sir, what is your advice if we think about the exam? If we think about the exam, what is your advice? What is your advice in relation to the exam? What is your advice in relation to the exam? What is your advice in relation to the exam? So my advice would be that if you get such a requirement, start it, give your maximum, okay? Start it, give your maximum, but monitor the time. Once your allocated times end, stop there. Because when you start it, you will understand at the very start that this is not a piece of cake. This will be a problem requirement. So start, do your maximum, but stop when the time ends. What students do is that they spend 45 minutes, 50 minutes on 8 marks. Okay. Now the examiner, now see, we did first 2 questions. There was no such requirement like this. Even till the end of this paper, there is no such requirement like this. So our teacher, my teacher used to say this, that there are some requirements which should not be touched. There are marks for leaving them. My teacher used to say for these requirements that this is a requirement for which you should leave it. You shouldn't be going for it. Okay, you should leave it for that. Don't waste your time, because if you will waste time on this requirement, this will cost you your marks on some easy requirements. Okay, so what I would say is, don't get stuck on particular requirements. If you can't do, leave it, move forward. Do whatever maximum you can do and then move forward. Okay, now what were the key learnings in this question? If the last period of account is of less than 12 months, if the last period of accounts is of less than 12 months, you need to compose the terminal loss. If the last period of account is of less than 12 months, you need to compose the terminal loss. In individuals, we look at the fiscal year. Okay, the first point. Then, once you have composed the terminal loss, this is a separate issue. Basis period calculation, merging the periods, this is completely different. This is a completely different issue. Last period ends in the same fiscal year, you merge them, you file a single assessment. Once done with this, you have to calculate the loss relief. Make a format. Instead of loss, put as 0, make the workings. While calculating the savings, think that if there is any personal allowance wastage, you have to take its impact also. I hope that I have made myself clear. Okay, let's move forward. Requirement B. Explain the CGT implications for Sabine arising from the sale of business premises and specialist machine to Pattern Limited, and calculate the amount available to Sabine from the sale of these assets after paying any CGT liability arising. How many marks are there? There are 5 marks given for it. Okay, there are 5 marks given to it. Let's look at it. It is an easy requirement. It is an easy requirement. Let's look at it. Explain the CGT implications for Sabine arising. Explain the CGT implications for Sabine arising from the sale of business premises and specialist machine to Patan Limited, and calculate the amount available to Sabine from sale of these assets after paying any CGT liability. Okay, let's look at it. Now, let's go to the scenario and look at the sale of business premises. This is easy, and I want you all to now be involved in the answer. Now, business premises, it was acquired in July 2012. Its cost is 86,000. Its sale proceed is 114,000. Okay, so disposal proceed is equal to market value less cost. This will give you a chargeable gain. Annual exemption is used by Sabine every year, so you will ignore the annual exemption. You will get the taxable gain on which you will calculate the CGT. Very good. One student identified BADR, business asset disposal relief. Yes, it will be available because Sabine has been trading since 2012. So 2 years ownership is completed. She will seize the business on 31st December 20, and she will then sell the assets within 3 years. I'll repeat it again. Listen to me very carefully. Let's work out the business premises first. Let's work out the business premises first. Business premises. Let's look at it. Disposal proceed. What is the disposal proceed given? Listen to me. What is the disposal proceed given? It's 114,000. The disposal proceed is 114,000. What is the cost? What is the cost? Look at it. The cost is 86,000. The cost is 86,000. Okay. So what will be the chargeable gain? 114 minus 86. So the chargeable gain will be 28,000. Very good. The annual exemption is already used. Please don't make silly mistakes. These will cost you marks. Annual exemption is already used as per scenario. Okay, it is stated here that uses his annual exemption for CGT purpose every year, so it's already used. The taxable gain is 28,000. CGT will be charged at 10%. Why it will be charged at 10%? Will anyone tell me? Okay, business asset disposal relief will be available on sale of business premises. Okay, it will reduce rate of CGT to 10%. Badder is available because Sabine owned business for more than 2 years and she is selling business assets and she's selling business premises within 3 years of cessation of trade. I will repeat it again. Just listen to me very carefully. No, the qualifying assets for badder and rollover relief are different. For badder, there are 3 situations: sale of ongoing business, sale of seized business assets, and sale of shares. Okay, sale of ongoing business, sale of seized business assets, and sale of shares. Disposal proceed less cost, this gives me chargeable gain. Then I have the taxable gain, and then we charge the CGT. Disposal proceed is 114, less the cost 86,000. Chargeable gain is 28,000. Annual exemption is 0. Taxable gain is 28,000. The badder will be 2,800. Business asset disposal relief will be available on sale of business premises. It will reduce rate of CGT to rate of 10%. Badder is available because Sabine owned business premises for more than 2 years and she is selling business premises within 3 years of cessation of trade. Okay, if you will not write the conditions, yes, the marks will be deducted. Okay, now, so what will be the proceed? The proceed was 114,000. Your capital gains tax is 2,800. So proceeds after CGT will be, can anyone tell me, 114 after 2,800? It will be 111,200. Okay, I hope that it's clear. Now let's look at the another asset, which is the specialist machine. Its cost is 49,000. Its proceed is 41,000. The business premises had been wholly occupied by Sabine throughout the period of ownership. Sabine had claimed capital allowance on specialist machine. I want answer from you people. I want answer from you people here. What about the specialist machine? I want answer in relation to CGT. What will be the CGT on the specialist machine? Please tell me on the chat box. There will be no CGT. Very good. There will be no CGT. Because it is being sold on loss, DP is 41, cost is 49, it is being sold on loss, and on capital allowance assets, if there is the loss, there is no relief. Okay, so now let's talk about the specialist machine. Let's talk about specialist machine. Specialist machine the disposal proceed is 41,000. The cost is 49,000. Okay, the disposal proceed is 41. The disposal proceed is 41. The cost is 49. So this gives me capital loss of 8,000. Okay, no capital loss relief as it is a capital allowance asset. Okay, no capital loss relief as it is a capital allowance asset, as it is an asset eligible for capital allowance. Okay, no CGT impact will be involved. The question asked us to talk about CGT impact only. Okay, so the proceeds here are 41,000. The CGT here is 0. So our proceeds after CGT will be 41,000. Now let me respond to some of the queries because some students must be asking. I know that. Now, sir, if there was a gain and asset is eligible for capital allowance, yes, then the gain would be chargeable and then badder would also be available. Yes, badder would be available. Okay. Now, fall in value is not an issue. It's not IST that you'll write about fall in value relief. It's not IST that you'll write about fall in value relief. Okay, so let's look at it. Now, I would say that this was a balancing requirement. The examiner must also have felt bad by giving such a difficult requirement. The examiner must also be having a guilt feeling by giving such a difficult requirement in part A. So he balanced it in part B. He said, okay, don't get angry. I'm giving you some easy 5 marks. So business premises, simple disposal proceed, less cost. It was a chargeable gain. The annual exemption was already utilized. The taxable gain was 28,000. Okay. Business asset disposal relief will be available on sale of business premises because the business was owned for more than 2 years. Now, one very important thing. The question was just to talk on after paying CGT liability. So on capital allowance asset, you don't need to think about the capital allowance, okay? You just need to think about the CGT. So please make it clear. So proceed less CGT, that gives me proceed after CGT. Then for specialist machine, there was a loss of 8,000. On capital allowance assets, there is no loss relief. If there would be gain, it would have been chargeable. And yes, the badder would also be available. Okay, so this is proceed after CGT. I hope that it's easy one. Is it clear? Anyone? So now we have a last requirement of 7 marks. Explain the tax deduction and reliefs available to Patan Limited. So now we have to move towards Patan Limited working. I suggest a 10 minutes break because I think that it has been tiring now. Let's take a 10-15 minutes break and then we'll resume. Okay, we have done some difficult requirements, so we must be exhausted by now. So let's take a small break and then we'll resume. Okay. We'll try to finish. If not, we'll finish in the next class. No need to worry. Okay. Okay, so we are resuming back. Okay, we are resuming back again. Please confirm that everyone is back. So let's resume. So we are moving towards, the last part, explain tax deductions and reliefs available to Patan Limited in the year ending 31st acquisition of new factory 22 in respect of the explain the tax deductions and reliefs available to Patan Limited in the year ending 31st March 2022 in respect of the acquisition of the new factory and expenditure on research and development. Okay, so let's start it. Let's read the scenario in relation to Patan Limited because we skipped it while reading first time. Patan Limited was incorporated and commenced trading on 1st April 2021. Patan Limited expects to make a tax-adjusted trading loss in the year ended 31st March 2022. Has no other source of income or gains in this accounting period. Is a small or medium-sized enterprise for the purpose of research and development expenditure. Patan Limited capital acquisitions and disposals. Patan Limited purchased a newly constructed factory building from a developer on 1st April 2021. Patan Limited paid £142,000 for this factory, which include £56,000 for the land. The factory was bought to use on 1st May 2021. Are you all with me? Please confirm me on the chat box. Okay, are you people listening? Okay, so Patan Limited made a capital acquisition of a factory on 1st April 21. They paid 142,000, which include 56,000 pounds for the land. The factory was bought to use on 1st May 2021. Now, here in the requirement, he's asking, explain the tax deduction and reliefs available to Patan Limited for the year ending 31st March 22 in respect of the acquisition of new factory. I have a question from you people. What will be the relief available to Patan Limited in respect of purchase of factory? Can anyone tell me? They purchased a factory. So what will be the relief? It will be structure building allowance, SBA. They are not selling it, they just purchased it. Now, obviously, on building, you don't get capital allowances. You need to think about the structure building allowance, SBA. They will get structure building allowance, SBA, on this purchase of factory. Now, if you remember the rules of SBA, structure building allowance is 3% per year. Structure building allowance is 3% per year. It is not available on land and starts from the start of the business activity. Now, one student has asked a very good question that said, what is this SBA? Structure building allowance. This was a topic which was introduced two fiscal years back, not in the current one more back. Okay, structure building allowance, SBA. If you go into your summary notes in capital allowances, you will find detail about structure building allowance. That what is it? Structure building allowance is a 3% yearly allowance. Structure building allowance is a 3% yearly allowance on building structures. Okay, a new type of capital allowance has been introduced. It is known as structure building allowance. Relief is given at straight line 3% every year. Okay, the SBA is available where a building has been constructed on or after 29th October 19. But in question, we will only be asked for after 6 April 20. Okay, so structure building allowance is 3% every year. It is not available on the value of land, and it starts from the day you start the business use of that property. Okay, so let's draft it. Um, on purchase of factory, Patan Limited will be able to claim structure building allowance as it is a new building purchased. SBA will be available at rate of 3% per year. It will not be available on value of land. Okay, it will only be available on the value of structure. Okay, value of amount eligible for SBA will be, now what is the amount? He purchased the factory for 142,000, which includes the land of 56,000. So 142,000 less 56,000, 142,000 less 56,000, which is the value of land. So what will be the remaining? 142 minus 56. So the remaining amount is 86,000. Okay, the remaining amount is 86,000. Okay, SBA will only be available from the date business use was started. So from which date the business use was started? From which date the business use was started? It was start to business use on 1st May 21. Was started. SBA will be available from the date business use was started, that is from 1st May 2021. In year ended 31st March 2022, SBA deduction will be 86,000 multiplied by 3% multiplied by, so May, June, July, August, September, October, November, December, January, February, March. 11 months divided by 12 months. So it will be 86,000 into 3% into 11 divided by 12. So it will be 2365. I will repeat it again. So do we need to remember the date requirement for SBA? No, you don't need to remember, because it is very clearly written that for the SBA eligibility, you just need to remember that asset is purchased after April 20. Because the examiner has made it clear that for SBA eligible asset, the purchase would be done after April 20. Okay, so any date after April 20, you will go for SBA. Now, this was an easy question, but some students are not clear on the topic of SBA. Now, that is the reason why they may face a difficulty. But if you remember the rules of SBA, this was pretty much simple. You purchased a factory. The purchase of factory will be eligible for structure building allowance. Now the land value will be excluded from it. There is no structure building allowance on the land value. There is no structure building allowance on the land value, so you will exclude the land value. SBA will be available from the date the business uses started. So the business uses started from 1st May, so you'll count the months and you will adjust the SBA. The rate of structure building allowance is 3% per year. So if you remember the rule, it is pretty much simple. But obviously, if you don't remember the topic of SBA, then you can't do anything. Okay, now coming back. And the expenditure on research and development. So there is some research and development expenditure also. One of the Patan Limited employee who is wholly engaged in qualifying research and development at annual cost of the company of £40,000. Patan Limited also engages subcontractors provided by unconnected companies. The total cost of these will be £22,000 in the year ending 31st March 2022. Now, since Patan Limited is a small and medium enterprise for R&D purpose, it will get 230% allowed expense on qualifying expenditures. I hope you all remember. It will get 230%. It will get 230% allowed expense on qualifying expenditures. On subcontractor staff, 65% portion is eligible. I'll repeat it again. On subcontractor staff, 65% is eligible. Now you need to remember the rules. These are simple rules. And if you don't remember, go to the summary notes, open the topic of research and development, and you'll find all the rules there. Okay, research and development, R&D, yes. Revenue expenditure for small and medium enterprise, it's 230% allowed expense. For subcontractor staff, only 65% qualify for additional relief. So let's develop the answer. Patan Limited will get 230% allowed expense on its qualifying research and development outflows. Okay, it will get 230% allowed expense on its qualifying research and development outflows. Okay, salary paid to its own employee will be completely eligible for R&D relief of 230% allowed expense. Okay, in relation to subcontractor staff, cost, 65% cost will qualify for 230% allowed expense, and rest will qualify for 100% allowed expense. See, there is one more which students do. What they think is that the relief is only on 65% portion. The relief is only on 65% portion. On 65% portion, we get additional relief. On remaining, we'll get the normal relief. So, how will it look like? How will it look like? Just listen to me. Okay. Salary paid to Patan Limited employee. Just a minute. I'll repeat the things again. Allowed expense. Salary paid to Patan Limited employee. Now the salary paid to Patan Limited employee, it's £40,000. On £40,000, you will get 230%. On £40,000, you will get 230%. So 40,000 into 230%. So it's £92,000. Then on subcontractor staff cost, okay, on subcontractor staff cost, 65% of the cost will qualify for 230% allowed expense, and rest will qualify for normal. Okay, see, 100% is the normal relief, 130 is additional. So the total allowed expense becomes 230%. Now the subcontractor staff cost is 22,000. Now on 22,000 pounds, on 65% portion, you will get 230%, and on the remaining 35% portion, you will get just normal 100%. On 65% of the portion, you will get 230%, which is 32,890, and other one is 22,000 into 0.35 into 100. So it's 7,700. See, what you can do is that you can show the split of 230% if you want. 100% is normal and 130% is additional. So the total allowed expense on qualifying expenses is 230%. Okay, on qualifying expenses you get 230%. On qualifying expenses you get 230% allowed expense. On subcontractor staff cost, 65% is qualifying. On subcontractor staff cost, 65% is qualifying. So on 65%, you got 230%. On remaining 35%, you will get only 100%. Okay. So what will be the total allowed expense? What will be the total allowed expense? 92,000, 32890, and 7,700. So it will be 132,590. I will repeat it again. I want you all to concentrate on it. See, when you make a qualifying outflow, you send allowed expense, 100%. So on 65%, you will get 230%. Will be normal 100%. Now, and on remaining, there will this allowed expense will be deducted from trading P&L of Patan Limited. Okay. Now it was stated in the question that Patan Limited is making a loss. Now for small and medium-sized enterprise, if you make a loss, for small and medium enterprise, if you make a loss, you can surrender the loss and you can claim the refund also. Patan Limited is expected to make a loss in year ended 31st March 2022. Patan Limited can surrender its loss up till maximum of 230% of qualifying outflows and get a tax credit of 14.5%. Okay, now these all are simple rules which obviously you need to revise if you have forgotten. If you have forgotten, you need to revise them. If small and medium enterprise is in loss, it can claim 14.5% as a refund. Okay, now a student is asking, sir, what if we don't remember any particular rule? Then what will happen? Nothing. It will cost you 1 mark. If you forget one rule, it will cost you 1 mark. So there is not too much to worry. If you forget one rule, okay, 1 mark is normal. From 100, you fall to 99, 98, 97. So just make sure that you don't forget 50 rules, because then you will fall below 50. Okay. So 1-2 marks for each rule. So don't get too much worried. What you need to understand is that advanced taxation is a paper in which there are many small rules. So it is very much normal that students forget the things. Even While we are doing the paper, we are teachers, we have done the questions many times. We also forget the things. So it is nothing abnormal. If you forget the rule, it's completely normal. This happens. Okay. Now you don't pass at 100 marks, you pass at 50 marks. Even one very important thing which I'll tell you. The examiner also gives a leverage to the students. Like if the question is of 7 marks, he keeps 9 marks available in it. So even if a student forgets one or two things, he can get the maximum marks. So examiner also gives some leverage to the students. Because in advanced taxation, obviously no one can remember all the rules. Okay. So if you look at it, in this part, he asked us about the structural building allowance and the research and development thing. Okay, so if I look at this entire answer, I would say that it was a bit difficult. I will agree. It was a bit difficult due to its first part. Due to its first part, which was the terminal loss composition, that was bit difficult. I will agree with it. But obviously, what you need to understand is that if you forget some points, it will not create a difference of pass and fail. Okay. Now, sir, what do you mean by 230% maximum? Basically, the surrendering of the loss, the tax credit is not of the entire loss. The tax credit is up till maximum of your qualifying outflow. If there would be no limit of this, what the people would start doing is that if they would have a trading loss, they would spend £5 on R&D and they will claim refund on their entire loss. So the tax department says that the refund is not available on your entire loss. The refund is not available on your entire loss. It is due to R&D. So the refund will only be available up till 230% of qualifying R&D amount. If you have a loss of 100,000 and you spend £5 on R&D, you will not get refund on £100. It will be restricted to 230% of qualifying R&D amount. Okay. So if we go through this question one time, first of all, he asked us to calculate the relief in relation to terminal loss. So there was some terminal loss composition involved in it. Then I told you that once you have composed the terminal loss, second step would be to look at the basis period, and then we looked at some tax benefit calculation. Then there was a very easy part, sale of business premises and sale of specialist machine. And then the last part was in relation to structure building allowance and research and development. Is it clear? Do you people have any query? If you have any query, feel free to ask me. Okay. So now let's move towards the last question of this paper, which is question number 4. Let's look at it. I want you all to concentrate on it. Sir, how long will S be available? It is available and it will continue till 33.3 years because it's 3% every year. Okay. Now let's start the last question. You should assume that today's date is 1st September 2021. You should assume that today's date is 1st September 2021. CADIN requires advice on the capital gains tax implications of proposed sale of antique chairs, payment of potential inheritance tax liability in respect of 2 lifetime gifts, application of personal service company, IR 35 legislation. His wife Amihal requires advice on the income tax implication of receiving overseas income. The following exhibit is available on the left-hand side. Kadin and Amihal, the information should be used to answer the question requirements within your chosen response option. So this is some basic information which is obviously of no big use. Let's read the exhibit and see what it's saying. Kadin and Amihal. Cadden is resident and domiciled in UK. Cadden will sell 4 antique chairs on 6th October 2021. Cadden is the sole shareholder, director, and employee of Mandini Limited. Acquisition of antique chairs. Cadden was gifted a set of 6 chairs by his mother, Phoeba, on 3rd March 2019. Okay? On 3rd March 2019. Now, the chairs had a market value of £152,000 on that date. Phoeba had purchased the chairs for £106,000 on 8th August 2009. So since Cadden got these chairs as a gift, he would have received the chairs at the market value. Okay, Cadden was gifted these chairs by mother. So it will not be transferred at cost, it will be transferred at market value. But this was done back in 2019. Sale of antique chairs. Cadden sold 2 chairs to unconnected person for £42,000 on 10th September 2019. The 4 remaining chairs were valued at £93,000 on that date. Cadden is proposing to sell the 4 remaining chairs to his son, Nathy, for $35,000 on 6th October 2021. These 4 chairs are expected to be valued at £99,000 on that date. Cadden's previous lifetime gift. Cadden's only previous lifetime gift was a gift of an investment property to Nathy on 2nd July 21. This gift resulted in a gross chargeable transfer of $380,000. Then we have some detail about Mandini Limited, and then we have some detail about ML. So let's look at the requirement specific to Cadden. Okay, please be connected with me. Okay, Part A1. Explain with supporting calculation the capital loss which will arrive on the proposed sale of antique chairs to Nathy and how this loss can be relieved. How many marks? 4 marks. How many marks? 4 marks. I want you all to listen to me, please. Cadden and Nathy. Cadden and, it's not Cadden and Nathy, it's Cadden and Amahil. It's question number 4. Please be connected. I will review the things again because we have just read the question for the first time. Cadden and Amahil. Okay. Cadden and Amahil. We are doing the first requirement. I'll underline it. Okay. Explain with supporting calculation the capital loss which will arise on the proposed sale of antique chairs to Nathy and how this loss can be relieved. So let's look at it. Cadden is proposing to sell 4 chairs to his son Nathy for $35,000 on 6th October 2021. Now, if you read the requirement, we only have to talk on the Nathy chairs. We only have to talk on Nathy chairs. So he will be selling these shares for $35,000. But please make it clear, the CGT is calculated on market value, not at your values. Okay? The CGT is calculated at market value, not at your values. The market value is $99,000. Okay. Let's start. I want you all to concentrate. It's something very easy, believe me. Disposal proceed is equal to market value. So what is the market value of these 4 chairs? It's 99,000. It's 99,000. Disposal proceed will be market value as transaction is with connected party son. Okay, so there is a risk of manipulating the values. So the disposal proceed will be the market value, not your manipulated value. You are doing the transaction with your connected party son. Disposal proceed is equal to market value 99,000. So what is the cost? If you look at it here, your cost. So what if it's not connected party? Then also we pick up market value. But if it is a transaction with market value, then the risk of manipulation is high. Okay. If the transaction is with market value, the risk of manipulation is very high. Now, Cadden is proposing to sell the 4 remaining chairs. So we need cost of 4 chairs. Cost of 4 chairs because he is selling, giving 4 chairs to his son. Now, for the cost, you need to listen to me very carefully. He got 6 chairs from his mother, Fiba, when the market value was 152,000. Now, from 152,000, he has already sold 2 chairs earlier. See, now this was very good thing in the question. He made part disposal when he sold the 2 chairs. Today, he is making the remaining disposal. Please use your mind. He made part disposal when he sold the 2 chairs. Today he is not making the part disposal. Today he is selling the remaining chairs. Cadden sold 2 chairs to an unconnected person for £42,000 on 10th September 2019. Part disposal was done earlier. Part disposal is not being made today. Cost of 6 chairs. What was the cost of 6 chairs? The cost of 6 chairs was 152,000. The cost of 6 shares was 152,000. Okay. Cadden received 6 shares from his mother at market value. Okay. So he will receive the shares at market value, not at the cost. Okay. So cost of 6 shares was 152,000. Okay. Now, cost of 2 chairs already assessed. Now here you need to understand. 2 chairs were already disposed by Cadden. Okay, so 2 chairs are already disposed by Cadden. So now you need to work out the part disposal. So the total cost was 152,000 multiplied by. How do you work out? 2 chairs were sold for how much? 2 chairs were sold for 42,000. The market value of remaining on that date was 93,000. So total cost multiplied by disposal proceed divided by disposal proceed plus market value of remaining. Now, believe me, this is a very simple concept, but many students get confused in it. I will repeat it again. The total cost was 152,000 multiplied by disposal proceed of those 2 chairs divided by disposal proceed plus market value of remaining. So the cost of 2 chairs was 47,289. So the base cost for 4 chairs will be 152,000 minus 47,289. So it's 104,711. I will repeat it again, so no need to worry. Just listen to me. 104. I will repeat. Yes, don't worry. I'll repeat. So this will give me capital loss of how much? 99,000. So it's 5711. Okay, let's repeat it again. Let's repeat it. Because now believe me, it's a simple concept, but students get confused in it. Now, why do students get confused? Let's look at it. See, disposal proceed is equal to market value. It's 99,000. Okay, this is the disposal proceed will be market value as transaction is with connected party son. Okay, how many shares he's disposing to his son? Okay, disposal proceed is of 4 shares. Okay, disposal proceed is of 4 shares. He is giving 4 shares to his son. Just listen to me. Believe me, it will get clear. Don't rush. Cadden is proposing to sell the 4 remaining shares to his son Natty for 35,000 on 6 October 2020. These shares are expected to be valued at 99,000 pounds on that day. The market value of these shares is 99,000 pounds. Disposal proceed will be market value as transaction is with connected party son. Okay. Now we need cost of 4 shares. The problem is that he never purchased 4 shares. He got 6 shares from his mother. He got how many shares? He got 6 shares from his mother. Cadden got how many shares? The shares had a market value of 152,000. He got 6 shares from mother. So 152,000 was the cost, but it was the cost of 6 shares. 152,000 was the cost. 152,000 is the cost of 6 shares. Now from these 6 shares, just listen, from these 6 shares, he has already sold 2 shares. When did he sell those 2 shares? See, Cadden sold 2 shares to an unconnected person for 42,000 on 10 September 2019. What you need to understand is that from these 6 shares, when he sold the 2 shares, from these 6 shares, when he sold the 2 shares, there must be a calculation of base cost. From 6 shares, when he sold 2 shares, there must be a calculation of base cost, the cost of remaining. When he sold the 2 shares, some cost must have already been assessed. So, total cost for 6 shares was 152. Cost of 2 shares already assessed. Total cost multiplied by DP divided by DP plus value of remaining. When the 2 shares were disposed, they were disposed for how much? They were disposed for 42,000 and the remaining market value was 93,000. So total cost into DP divided by DP plus value of remaining. Okay, this gives me base cost for 4 shares. I used it here, base cost for 4 shares, and that gives me the capital loss. Okay, now he's asking that how this loss will be relieved. As capital loss is created on transaction with connected party son, this loss can only be relieved in future transactions with son only. Okay, if the loss arises with the connected party, it can only be relieved in future transaction with that same connected party. This is the rule. I hope you people know that. Okay, now if you have any query, please ask. If you have any query, please ask me. Is it clear that why did I calculate the base cost? Basically, what you need to understand is that he got 6 shares. But from these 6 shares, he has already sold 2 shares earlier. From these 6 shares, he has already sold 2 shares earlier. So the 2 shares which were already sold must have got their share of cost. The 2 shares which have been sold earlier must have got their share of cost. Now, what was their share of cost? Total cost into DP divided by DP plus market value of remaining. Okay, so the base cost for remaining 4 shares was 104,711, which we adjusted, and we got the capital loss. So it was an easy requirement for 4 marks. It was an easy requirement of 4 marks. Explain with supporting calculation the capital loss which will arise. So first of all, the 4 shares which he gave, which he's selling to his son for 35,000. 35,000 is not the relevant value. Just ignore it. They will be valued at the market value, which is 99,000. They will be valued at market value, which is 99,000. Now, what about the cost of 4 shares? So we'll first look at the cost of 6 shares in total. Now, from these 6 shares, as he has sold already 2 shares, so we deducted the cost of those 2 shares and we got the base cost for remaining. Okay. Now, let's move forward. Part A2. Let's bring it here. Advise on the availability and effect of installment option for payment of NETI's inheritance tax liability in respect of the investment property and antique shares on the assumption that Cadden dies on 20th March 2026. I hope you people know the inheritance tax installment option. IHT of death can be paid in 10 installments if it is related to land and building or the shares. IHT can be paid in 10 annual installments. Okay, I hope you people remember, and if you don't remember, just open the summary notes and revise the rule. In administration, IHT administration, you can find that IHT can be paid in 10 installments if asset is a land and building or shares. So, advise on the availability and effect of the installment option for payment of NETI's inheritance tax liability in respect of the investment property and antique shares. Now, this requirement is only for 3 marks. He has made it clear that you don't need to calculate anything. So, Cadden has gifted these shares for remaining shares, and he has also gifted some investment property. So, first of all, installment option will not be available for gift of antique shares because it is only for land and building and shares. For investment property, installment available as it is a gift of land and building. For investment property, installment option will be available. Okay, death tax on Cadden's death, which will get due after 6 months of death. Now the death is on 20th March 2026. Death tax on Cadden's death, which will get due after 6 months of death on 30th September 6. 6 months of death. So leave the month of death, then count 6 months: April, May, June, July, August, and September. Death tax on Cadden's death, which will get due after 6 months of death on 30th September 2006, can be paid in 10 annual equal installments by NETI. However, it is necessary that NETI do not sell the asset before paying all installments. Okay, so this was some basic IHT administration issue. Inheritance tax can be paid in installments for land and building and for shares. Okay, it can be paid in installments for land and building and for shares. but it is necessary that you have to retain the asset, that you have to retain that. Okay. So if you look at it, the part A1 explained with supporting calculation, the capital which will arise on the proposed sale of antique shares, 4 marks. The capital loss which will arise on sale of antique shares, 4 marks. Okay. Okay. The capital loss which will arise on sale of antique shares. So for antique chairs, we said that disposal proceed is equal to market value is 99,000. We need cost of 4 chairs. So from already disposed to, and then there will be administration issue. We completed our question number 2 first of all. Okay. Then we move towards question number 3. We started our today's class. We started question number 2, in which we completed the today's class with remaining 2 requirements. One was IHT, overseas CGT, and some overseas relation to overseas income, and there was one taxation losses. And now we are on question number 4, CADIN and ML. Okay. Now we are left with 2 requirements. We'll next class. We'll complete them in the next class. Now our next session will be after 1 day break. You know that. Our next session, I think there is some connectivity. Okay, I'm resuming back now. Now is my voice clear? Okay, sorry, I'm repeating it again. We did part A1 and part A2. Now we are stopping our today's discussion here. We'll continue further in the next class and we'll complete the remaining 2 requirements. Okay. Now, today we completed our question number 2, remaining requirements. Okay, I hope you people remember. Okay, then we move towards question number 3, which involves some complex calculation of losses. And then we looked at question number 4, which we are doing. Okay, now what I was saying is, listen to me. We have 1 day break. We have 1 day break. Tomorrow there is no session. Our next session will be on Friday, day after tomorrow. So what I want from you people in that meantime, please listen to me. First of all, you have to revise what we have discussed in these 2 days. And you have to go to my YouTube channel of Owais Mirchawala. There I have uploaded 1 paper more for you people. That is June 2021 paper. I want you all to complete that paper. June 2021 paper. Listen to my session of June 2021. It is in the same approach. Complete that paper. Then on Friday, we'll complete this and we will start 1 more new paper. So as per my promise, we'll do maximum in this webinar. And other than that, I'll provide you 3 complete papers so that you can have an idea of the exam approach, of the dealing with the exam software, dealing with all topics together, time management, advices, and then you people have to solve the mock and send me for checking. Okay. Now, one student has asked that, sir, what is the date of installments? My friend, my friend, whenever that person dies, whenever the person dies, the IST is payable 6 months after that. So that is 30th September 2026. Through installments, through installments, you will get 10 years split, like September 26, September 27, September 28. So 10 annual equal installment. Now, from the due date of 30th September 26, you will move forward up till 10 years. The mock paper is available on the CBE practice platform. I have in the previous session, I told you that how you have to access the practice platform. Okay. So you have to attempt the mock paper there. My advice is that make a target that the webinar will complete on Friday. Till Sunday, you will complete those remaining sessions, which I will send you so that you people can complete 3 complete papers. Then by the start of week, like on Monday or Tuesday, you people should attempt the mock and send me for checking. Please don't send it on the last day because I also need time for checking. So send me latest by Tuesday, which will be, I would say, 31st, 31st of May, so that I get 2-3 days before checking and responding to you people. Okay. Thank you, everyone. We'll continue further in the next class.